What's going on, everybody, and welcome back to the channel. My name is Kramer, and in this video, I'm going to be comparing what would happen if you put $100,000 into the stock market versus if you put $100,000 into real estate. So without further ado, let's go ahead and jump in. All right, so first, let's start talking about what would happen if you put $100,000 into the stock market. And we're going to be looking at a 30-year time horizon for both the stock market and also on the real estate side. So I'm using this investor calculator on the government website. I'm saying that my initial investment is $100,000. Okay. We're going to assume that we're never going to invest any more money into it. It's going to be over a 30-year period. We're going to earn a 10% interest rate, which people say is the historical average for the stock market. And we're going to compound this on an annual basis. So when we calculate that, it shows us that our $100,000 investment into the stock market in 30 years will turn into $1.7 million. Okay. It's honestly pretty cool to see. You can even see the graph down here. And this is kind of just the beauty of compounding. The first roughly 15 years is pretty steady, and then boom, it just shoots up. So at the end of it, $1.7 million. Now to turn over to the real estate side, I'm going to use my friend ChatGPT because I like how it kind of walks me through everything. So I asked ChatGPT this question. Assume I bought a $500,000 house and put 20% down, because that's the same $100,000 that we're going to invest in the stock market. And I said, let's say I earn a 20% return from the property every year. So 20% cash on cash return from the property. Now, I know there's going to be haters on this video who say, Bailey, a 20% cash on cash return, that's crazy. You're not going to get that every year. And what I'm going to tell you is, so far on my properties, I've gotten way more than that on just the cash flow. We're not even talking about tax benefits, depreciation, not about any of that stuff. I'm going to say very firmly that 20% is not hard to achieve. Okay. So that's what I'm putting here. And I'm assuming that I don't reinvest the cash flow. So I'm earning $20,000 a year, but we're going to assume that I don't reinvest any of that money into anything else. And then I'm going to assume that the value of the property increases by 3% per year, which again is very average. So then if I scroll down, we're going to see here that after 30 years, the value of the property is going to go from $500,000 to $1.2 million. Okay. And we're going to own that free and clear. So if we want to sell it, we could have that money, or that's just the property value and we're going to hold it. And then the total cash flow earned over that time period is $600,000. So if you add up these numbers, it's roughly $1.8 million. Now, if we compare that back to the stock market analysis, you're going to see that it's $1.7 million. And you might be thinking to yourself, well, Bailey, in the stock market, I literally didn't have to do a single thing. I put it in there, set it and forget it. Versus real estate, it's way more active and is not passive at all. And I totally agree with you on that. But there's a lot of advantages and things that you can do in real estate that you can't do in the stock market, or just that people don't typically do. I'll start off with the biggest one, which is the cash flow from the property. So if we're earning $20,000 per year from this investment, we're not going to let that money just pile up and sit there and do nothing. What we're going to do with that cash flow that we get from the property is we're going to reinvest it. Now, for me, I reinvest all my earnings into more properties. So if I'm earning a 30+% return from my real estate just on the cash flow basis, I take that money and I get another 30% return, it starts to compound really quickly. Now, for this example, all I asked ChatGPT, and I'll show you here, is to just assume that we're going to earn only a 5% annual return from the cash flows that we earn from this property. Now, if we take that cash flow and we reinvest it at just 5% per year, now again, the property value is going to be the same after 30 years, 1.2 million, but the value from the cash flow is now going to be $1.3 million. Whereas before it was just roughly $600,000. So now this real estate investment started at $100,000 and is now at $2.5 million. Whereas again, back to the stocks, you may earn a little bit in the form of dividends, but not every stock has dividends. So just something to consider. Another reason why you might think, oh, Bailey, these are kind of close, but they're not even close at all, is the idea of refinancing. So in this example, we're just assuming that we're getting a 30-year mortgage and we're going to keep that same exact mortgage for 30 years. But let's say you get a mortgage and your interest rate is 8%. But then all of a sudden the interest rates go down to, let's just say, 5%. And because of that, your property value increases. So you refinance your property at a lower interest rate, so you have lower monthly payments, or let's just assume it's going to be the same or roughly the same payments because the value of it increased. But then you get to pull out money that you can then reinvest. And that's like the craziest part of it all, is the fact that, number one, you have monthly cash flow that you can reinvest. And number two, once your properties increase in value, which you can also, by the way, forcefully appreciate by rehabbing and renovating properties, but you can then refinance, take all your money out, and go on to the next project. So while earning these returns is not passive at all, and again, I think this is actually a really conservative number, you're going to make a tremendous amount more from the real estate side. And I mean, I can literally talk for days about this. You can use the real estate. You can actually vacation at the real estate. You can live in the real estate. You can actually do more things with this asset class than you can just put in stocks in the stock market and just kind of hoping for the best. So I know I'm obviously really biased because I love real estate, but I'm really curious to hear your guys' thoughts, comments, reactions down below. Let me know if you agree with me and let me know if you disagree with me. And I will see you guys in the next video. Peace.